How's it guys, welcome back to FX Rhapsody. Today we're looking at the USDJPY, USD dollar Japanese yen. We're only going to be focusing on this currency pair. But before we hit the charts, I want you to go visit my website. It's on the bottom left corner here, over here. The link is also in the description, where you will find some nice trading material. I've got some video categories there for those of you that's getting started into trading. There's also some nice strategies over there, and also my previous analysis. Preferred brokers, these guys are absolutely brilliant, so go visit that section of my website. And also COT reports. I will not be using the COT reports in this analysis, but you can go download it for free under the resource tab. So let us hit the charts. So we're looking at the USDJPY. Normally what I do is I start on the daily and I move down to the hourly time frame, but I want to kind of do a little bit of a reverse today. So we're going to be starting off on the hourly time frame. We see on the hourly, if you just look at the currency pair, I'm just going to zoom out a little bit. You had my previous analysis where we stopped. Okay, this is basically the beginning of the week. I was looking at those two areas, a high and a low, and looking for some kind of a break in structure or break whatever, and then retracement of Fibonacci or fair value gap, and then trying to catch big movements like this. But in all honesty, this currency pair did not produce any signals or any feet or any retracement or any Fibonacci retracements, fair value gaps, to actually catch this big movement downwards. But in between all of this, there was a couple of trades, and I want to talk about the couple of trades that was there to be caught, and also why this movement downwards happened and why it ended up on this area over here. But let's just zoom in a little bit so we can talk about the two little areas, or the two trades that could have been quoted during this week. So starting off this week, we had this little gap, obviously, that was formed. So we all see this gap, and this is always, and I've made a video about trading this little gap. And for those of you that haven't seen it, I think I think it is in the description, so just have a look there. So trading the gap video I made a couple of weeks ago. But also we have got this little structure in the market, and I'm just going to draw it in for you right about there. I'm just going to do that. I'm just going to zoom it in a little bit so we have a clear view of that structure. So round about there, I'm just going to do that, and there we go. So it's obviously a clear structure in the market. You have a resistance, resisting the market, breaking, support a little bit, breaking, resistance, and all that. So that is obviously a clear structure in the market. Now price came and it opened up, and it opened up with a gap, and it made a little retracement. So what do? You take your Fibonacci from this swing high to that swing low. Okay, so excuse me, for trading this gap, price retraced back to the 62% area. So that is your first entry that you could have taken. I'm just going to take out the two lines. Okay, that was the beginning of the week. So the beginning of the week started off with a little gap, swing high, swing low, retracement downwards. It's as easy as that. Okay, that is your entry. Where is your exit point? Now if you zoom out a little bit and you look to the left, okay, I'm going to zoom out and I look to the left. We have a very low candle over here. Okay, what does price action do? I'm just going to do that and tap it there. So that is a low in the market. So price action hunts these low areas because there is liquidity below that area. So price action comes and takes out that liquidity. And if you follow the movement upwards, price action has not tapped that liquidity. And if you zoom in again, you have your entry over here. Market opened up, gap. That's your first signal. So price is going to move downwards because it's going to fill the gap. So you enter your trade, and then your exit is that liquidity that's at the bottom. So first entry of the week for this currency pair brings you to at least 170 pips. That's a quick entry, first entry of the week, and I mean that's as easy as that. Always look to the left, always look for that lows in the market where price action goes to. So now price starts swinging up, okay? It hits that area in the market, and now it starts retracing back. Where does it retrace to? Okay, where does it swing back to? There is a fair value gap in the market. When price turned, after it took out the liquidity, it started moving up. It created a big bullish candle in the market, big imbalance, created a fair value gap in the market. Price bounced off that structure, okay? It acted as a resistance in the market. We had another push to try and break that resistance. Price closed below that, and then it started moving downwards. It went down to the fair value gap area in the market. Okay. And then after it hit that fair value gap, what did it do? It started shooting up. So there's your next entry. Okay. That is your next point of entry, right about there. Just going to highlight this for you. Right there. That's your entry area. So where's your exit area? Where's your biggest high? You're going to take this out. So where's your next biggest high? I'm just moving stuff around now by accident. So your next biggest high is going to be these areas in the market. Right there. That's your first one. Okay, that's your targets. Because price action hunts liquidity in the market. It wants to go and take out those sell stops, or the buy stops, excuse me, buy stops. People placing their sell orders, putting their stop losses just above it. Okay, that stop losses above it, same here, sell stop losses. So you have a buy, or you have a buy opportunity here, price going up, and your targets will be these sell stops in the market. So those stop losses being hunted, those liquidity areas being hunted in the market. And then obviously the big drop happened. Now, to be honest, for me, there was no, I mean, if I zoom out, okay, I actually want to go to the 4-hour time frame to show you this, because there was no opportunity. Just going to zoom in a little bit, just take this out. There's no opportunity, or there were no opportunities to hit that sell that happened there, that big movement downwards. No opportunities. I mean, if you take your swing high, swing low, there's nothing, price didn't retrace back to the 62% area. Okay, there's no entry over there. We still have a nice big fair value gap up here. Price did not reach that fair value gap. So the only thing you could have had is with your candlestick patterns, if you had to take that sell opportunity going downwards. But where did price end up? Okay, where did price end up? If we go back, I've actually drawn it in here because that was my target. If we go back in time and we go back to the 15th, 16th of August, price created this fair value gap in the market. Okay, we had some previous analysis on one of the currency pairs where one of these fair value gaps acted as a area of profit, or your target area. But we had this fair value gap that was created on the 15th of August, 16th of August, sorry. And price came down, did not hit that fair value gap. So that fair value gap is still in play. So price obviously went up. Okay, it went up, as you can see, just zooming out a little bit. Then it carried on going upwards. And then it started moving downwards. And then eventually it hit that fair value gap right there. But it's just a shame that there was no entry over here. Like I said, for those of you that caught that little sell entry, brilliant, okay? Whatever method you used, whatever the situation, brilliant. If that was your target, brilliant. If you had your fair value gap as a target, brilliant. Entry, there was no entry for me. But again, it just shows you that how price gets drawn to these fair value gaps in the market. And it's always key to have these fair value gaps highlighted on your chart, just to make sure that, you know, when you enter a trade, be it a sell or a buy entry, you have those fair value gaps just for exit areas in your market, target areas where price is going to be drawn towards, because that is what price action is all about. Price action gets drawn to these fair value gaps in the market, and it will always do that. I mean, it repeats itself over and over. So that is all from my side, guys. Like I said, there was just a short little video just on this currency pair. I just wanted to highlight two little entries on the 1 hour time frame. Like I said, and another one, just the exit area, how price gets drawn towards those fair value gaps. I hope you enjoyed this little video. Like I said, it's a short one. You know, if you did, don't forget to hit the like button, hit the subscribe button, notification bells, show me some love by hitting that super thanks. And yeah, be on the lookout for more trading videos coming your way. Guys, I hope you've been having a wonderful day and a wonderful weekend. Stay safe and happy trading, guys.